All right, guys, welcome on back. Good morning and happy Monday. Let's do a quick sound check here on YouTube and the free room. Good morning, Mandy, Lee, Lorna, my man Mirza, Christina. All right, guys, we will jump on in. For those of you in the free room, I will be back later today at 1 p.m. Central. So we'll do a little bit of prep here, and then we'll regroup later today and see how the cookie crumbled. One quick note here, guys. I'm making a few tweaks to the Big 3 indicator. One thing I'm going to play around with this week is just having the neutral bars be yellow versus gray. That way, the transitions from bullish to neutral or from bearish to neutral pop a little bit more. But let's see, guys. Futures have a bit of a pop here. S&P futures up about 0.8. The QQQ futures up a good 1%. While we're in town, we'll take a look at the Russell futures. Up about 1, and the Dow. Wrong ticker. IM. The Dow futures up about 0.7. So a little bit of a bounce here this morning. And frankly, guys, they've got to bounce it, and they got to bounce it pretty hard. I would think to avoid a pretty big flush lower here. So the theme of the week ahead, all the progress that the bulls made on this most recent push, right, progress in momentum, progress in structure, they've given back all that progress on this flush. So it doesn't mean from here we're going to fall apart and head back down towards the lows. It just means if we're going to rally and if we're going to turn the corner, from a structure and momentum point of view, the bulls are starting from scratch. And what I mean by that is we're not pulling back in the context of a good-looking daily chart. So there's a huge difference as far as buying the dip between a dip like you had back here, where you pull back to a 21, you print the buy signal and keep it going, versus we're pulling back and things go from bullish to neutral. We're under a 21, we're under the 50, and we're smooching the 200. So from here, for a daily chart to go back into an uptrend, they've got to start from scratch. And that theme, of course, is from the ground up. So an hourly chart totally busted last week. You're no longer playing the hourly chart to the upside in the context of an hourly uptrend. So it's a different story. If we're pulling back to a 21 EMA and we got buy signals, if we're pulling back to a 50, we can even pull back to a 200 SMA, and you can see continuation of that trend. But when you blow through all those levels, take out the 21, there goes the 50, there goes the 200. Again, doesn't mean we have to fall apart from here. Just means the bulls are starting from ground zero. They're starting from scratch. So with that being said, one of the ways they can quickly start to fix some of these problems would be a short squeeze. In other words, get the market to the upside really quickly. So that's where this morning might be a little interesting. On the futures, at least, we're back up here at 4K, which I'm told is a big psychological level, and we're trying to grind back up here through the 50. So a little bit of a bounce this morning. I think the tell is going to be on the first dip. So you can watch the futures, you can watch the the cash product. I'll probably watch the cash product today. But point being, say you rally all morning, how does the market handle that first dip? We're looking for signs of things going back into an uptrend. The S&P 500 is going to go back to 4,100. From a 1-minute chart to an hourly chart, things have got to go back into an uptrend. They got to rebuild structure. They got to shift momentum. They got to cross the moving averages. And most importantly, they have to behave like an uptrend on the dips. So I would look at the market and say, all right, the bulls have actually got a decent chance here of taking this a little bit higher. Would be if your first pullback, your first dip, finds support where it should find support, stabilizes, and then begins to turn the corner. If instead we're getting this pop this morning, but the first dip totally kills any little bit of progress they're trying to make, then I think the problems from our bigger time frames continue to take us a little bit lower. So the theme of the day, guys, will be patience. I don't think I'm going to short it immediately, but I'm definitely not going to buy the dip here first thing this morning. So it's a little bit of hurry up and wait, as JC would say. But I think maybe more important than the S&Ps, two things to anchor to here as far as your decision-making process, especially for swing trades, the dollar and HYG. So my thinking for now, I'm not going to trust any bounce in the market. And what I mean by trust it is, I'll day trade it, I'll take it to lunch. Maybe I'll wine and dine it and take it to dinner, but I'm not trying to take it to bed. I don't want to whip with a long swing trade, tomorrow morning or any point this week until things drastically change. And a big part of that, thought process is where's HYG? And my thinking is I'm not going to trust a rally. I'm not going to get swing long on any bounce in the market so long as HYG is under all these moving averages. So hopefully you guys watched Sam's video from Friday. I think he described it pretty well. You've got trend support. In an uptrend, your trend support could be your 21 EMA, the 50, the 200. There's trend support, and then there's structure support. Right. Structure support would be something like your most recent major low. So where things get a little bit suspect here, HYG loses all trend support. Under the 21, under the 50, under the 200. And we're doing that with a brand new daily sell signal. So if you can't quickly mount yourself back on top of that trend support, if they can't quickly rip that back above 75.50, then there's a pretty good chance you're going to come down to structure support. You're looking at 73, 72 and a half. Point being, that would put much more pressure on the market. So one of the most important spots to see things get cleaned up is actually over here in HYG. And a lot of times that'll clean up before the S&Ps and it'll break down before the S&Ps. It's a really nice gauge of where we're likely to go. So I do think you want to put that in your notebook here for the next few weeks. Don't trust any bounce. Don't take a bullish trade to bed if HYG is still under all those key moving averages. So we'll see if they can work on that today. And then the dollar heating up here a little bit. So we got a bullish daily chart. And we did crank out a close last Friday back above the weekly 21 EMA. So this is kind of interesting. Say next few days or so, the Dixie pulls back to the 21 EMA. Well, that little bit of short-term weakness in the dollar is probably going to result in a decent pop in the market. My thinking is a bit more structure. We might pull back a little bit. You might get a decent pop in the market. But does a Dixie continue to sit here in a better-looking daily structure? Where if we pull back to the 21 EMA, but we're still printing that buy signal, we find support, we stabilize, we turn the corner higher. Expectation should be the market goes right back down. So bigger picture things to anchor to, where I think, running scans for daily squeezes, buying the dips, where I think focusing pretty much solely on the buy side of the market would make more sense, would be if one, the dollar can end up back under that 21 EMA. And then if two, if our old pal HYG can end up back above those moving averages. So if we wake up on Friday morning and there's the junk bonds closing above 75.50, here's the dirty dollar closing back under that 21 EMA. For me, it's a pretty good indication we're trying to get back to buying the dips and focusing on the buy side. In the absence of that kind of progress in both the dollar and HYG, day trade these bounces, right, sell some 0-day till expiration puts, but the swing trading thought process should be we're still looking to short the bounces. Alrighty, guys, and then a couple more charts here that I think will capture everything you got to focus on: Tesla and Apple. So if you look at like Google, for example, Google got whacked. Amazon, prettiest chart with a daily sell signal under the 50. There's Microsoft. Yeah, Microsoft's not too bad, but Apple and Tesla, they've got much better structure than the rest of those FANG stocks. So here's Tesla hanging out above that 21 EMA. We got a brand new daily squeeze. Typically something we're going to think about buying. Well, just understand the correlation between bigger names like an Apple and a Tesla in the overall market. If the next 5 days or so Tesla's just screwing back towards 220, probably bodes well for the market. Get a little bit of a flame up under one of your bigger names. But go back to that thought process of trend support and structure support. If Tesla takes out the 21 EMA, usually our go-to level of trend support, you could have a window here for a flush down towards 160-ish. That would put a lot of pressure on the market. So as we're trying to put the pieces of the puzzle together here this week, best case scenario for the bulls, Tesla fights the good fight and tries to grind higher. We go into the weekend with Tesla closing under 190. No good for your market. And then same thing here for the Big Apple. Under the 21 EMA, under the 200 SMA, if they can't fight and scratch their way back above that level this week, your next big target could be 140-ish. Right? And that, of course, will put pressure on the market. So keep it simple, guys. Keep an eye on Apple. To the extent Apple is under 147-ish, it's a little bit sketch. If Tesla finds itself under 190, that's not good for the market. But I do think, most importantly, there's going to be bounces to day trade, and eventually there's going to be bounces to get swing long. So long as HYG is under 75.5, these are bounces to day trade. And I got to think so long as the Dixie is above that 21 EMA, they're just bounces to day trade. And that is that, guys. Not anything different over here in IWM. Nothing knocking your socks off. The Dow is pretty interesting. Interesting from the standpoint that of the four indexes, this was kind of the first one to get the party going. Eventually, the S&P's caught up, the Q's caught up, but the old Dowski here, really the first one out of the stable. Big push, and then while the S&Ps and the Q's are trying to catch up, the Dow basically goes flatline for 2 months. Now you got a daily squeeze with a brand new daily sell signal, and the only level of support left, as far as trend support, your daily 200 SMA. So just continue to work on those if-then statements. If the Dow takes out the 200 SMA, it's probably screwed. And we know the correlation there. So that is that, guys. That's my spiel. That is my story, and until things change, I'm sticking to it. So the only open trade that I've got right now with over here at Simpler is a March expiration 4100 call credit spread on the S&P futures. And I would think we're in pretty good shape here, but we're not going to tempt her. But guys and gals, if you have any questions, any charts you want to take a look at, any comments, complaints, requests, throw them at me here in the chat. And we've got we got a good 10, 15 minutes for Q&A before we got to roll into the gold room. I got the open today, so we'll see what we can do. Now, out of curiosity, guys, in the chat, what are y'all thinking? You looking to short bounces? Are you buying this dip? Are you doing none of the above? What's the move here this week? I'll show you guys the lower time frames here on the futures. They're trying to turn up here. Your hourly chart goes bullish. 30-minute chart goes bullish. 15's been in a bit of a groove here. We'll see what they can do. They're fighting where they gotta fight. It almost becomes like a self-respect thing. Even if the bulls are toast, they've got to have a little bit of self-respect to at least try to fight the good fight. Put a little bit of honor on their name. All right, my man Tony is thinking short the bounces. Scott is thinking short the bounces. Christo, it's kind of a tough market to trust. If anything, this market, I think, has taught a lot of us, have a game plan, have your notes, have a game plan for what you think should be the course of action. But at the same time, the willingness to wake up every day and just kind of start with a fresh slate. That's been really helpful in this market. Because there's days where we'll go to bed and it's like, man, everything is lined up for a push higher tomorrow. So when the market closes all night, all morning, all we're thinking about is, okay, I'm going to buy Apple, I'm going to buy Tesla, we got squeezes, we got buy signals. And we've seen time and time again, the following morning, the market will just, like, yep, you thought you were getting long. And then the same thing to the short side. We got the sell signals. We're taking out key support. Man, Monday's going to be a bloodbath. And then, boop, they hit you with a nice 1% popper into the open. So to me, that's where things like HYG actually become really helpful. And admittedly, guys, I kind of did a crappy job watching things of this nature, like watching the other pieces of the puzzle during this most recent push we saw in the market. Admittedly, all my focus kind of went towards the pretty colors. Like, oh my God, we got buy signals, we got squeezes. We haven't seen this in like a year. It worked. We made some decent money on the ride up. But it would have been nice to know, all right, HYG's kind of running out of gas over here. Before this winds up with a hole in the side of its head, it's nice to see that divergence. And tweaking the indicator here a little bit over the weekend, it also would have been nice to see the first buy signal on HYG. It's like, wait a minute, guys, I know the market looks awful, but check out HYG. It canceled out the sell signal. It's closing back above that 21 EMA. Before we get signs of strength in the market itself, HYG kind of leading the way here. That's where things like that can become, I think, a little bit more helpful, where in a market that doesn't offer too much clarity, this can offer a little bit of clarity. Where I'm not going to trust the market to the buy side if HYG can't fix all the problems here. So I'm with you, Scott, or Christo rather. George has got some AXP. So George, here's my thinking right now, and I still run the scans every day because I'm a junkie, right? We're all options junkies here. So every day I run the scans, bullish or bearish. I'm looking for my daily squeezes. I'm doing that work. However, this is one of those times where I think the only chart that really matters, the dollar, HYG, but the chart that's going to capture everything is the S&Ps. And what I mean by that is if the next 2 weeks or so, the S&Ps are squeezing the shorts, we're rallying, we're back to 4,100, 4,150, 4,200. As goes the market, goes the stocks. So where that AXP daily squeeze has probably got a decent chance of firing to the upside would be if the S&Ps could squeeze the shorts. But if instead the next 2 weeks sees the S&Ps continuing to grind lower, there's going to be that domino effect. Down goes the market. Down goes your tech stocks, your financial stocks, the semiconductors. So AXP is a solid name. Structurally, it's way better than a Google, a Microsoft, an Amazon, even an Apple. To me, the bigger question would be, well, where's the market going now? If we're going lower, I don't like the odds of getting long AXP. If the market rolls over, I'd rather short AXP and vice versa. So that's where I'm seeing, at least on my end, any bullish trades, any bearish trades, they're probably just going to be on Mama Market herself. We wake up 2 weeks from now, we're down here at 3,800. Your thinking should be 90, 95% of the things on your board, they're probably trading much lower, regardless of how strong they were, regardless of buy signals. But it cuts both ways. We could run the scans for sell signals this morning. We could find something that has a sell signal on a weekly chart down to a 1 minute, right? Like perfectly aligned for a huge flush lower. But if we look up in 2 weeks and the S&Ps are back at 4,100, that short trade probably didn't work. So it's a tricky spot. Tricky for me because it requires patience. I love those mornings where it's like, hey, it's crystal clear. We're trying to buy this, we're trying to short that. This is it's an awkward spot. An awkward spot. We could look up in a few weeks and, lo and behold, the dip to the 200 SMA. Who knows, guys? Maybe it would have been the best buying opportunity of 2023. Way too early to call for that. We're not back above the 50. We're not back above the 21. We don't have buy signals. We'll find out. We'll find out. George, you did a put credit spread on Friday. So, George, it expires this coming Friday, right? Out of curiosity, what do you got for strikes? Yeah, George, what do you got for strikes? And if you're a bit of a madman, I'm a madman every now and then. If you got some short 3,800 puts, you might be in good shape. So depending on your strike selection, two things to consider, George. Get my notes up here. A couple things to consider, actually. One, you know, blow this up a little bit. I'll squinting. Right, what are your short strikes? Are they deep out the money? Are they in the money? Are they right at the money? Time till expiration. Always got to take that into consideration. But George, since we're going to pop this morning a little bit, I think the initial thing for you to keep in mind is how much of your max profit have you already collected? Market's popping. You're probably going to be in a nice profit. That's where I think you want to make your decision. Say, for example, we wait. Say for example, this morning your put credit spread is 70% of max profit. 70% of max profit. Now it can be tempting to hold that trade. Let me get 80%. Let me get 90%. Some of us like to hold it until expiration and see it expire at max profit. But George, say this morning you're in that 70% of max profit neighborhood. The biggest thing you have to consider is what is your risk versus reward if you choose to continue to hold that trade. Get what I mean by that? We wake up today, market opens, your credit spreads at 70% of max profit. Well, your reward for holding it another 4 days is limited to that extra 30% of max profit. So for easy numbers, say max profit is $1,000. This morning, you're going to wake up with a $700 open profit. Now, your reward, if you continue to hold the trade, and it doesn't matter how much higher the market goes, is another $300. That's it. You catch the rally of a lifetime this week, you're only making another $300. But your risk, George, would be your $700 of open profit. God forbid the market pulls back and that position goes back to break even. On top of that, it's the original risk on that trade. So let's say you're risking $2,000 to make a max profit of $1,000. Well, if you got 70% of that at the open, your reward for continuing to hold on is $300. Your risk could be $2,700. You lose your $700 of open profit. That trade goes to max loss. So just things to keep in mind. You might have squeezed all the juice here into the open. If anything, take your paycheck, then open another put credit spread with a little bit more premium to collect. That'd be my thinking. That'd be my thinking. I think a good market to always be paying yourself. Heck, even if it's 40, 50% of max profit. Not bad to start off the week with a nice little paycheck and then kind of reevaluate from there. Good work, though. Good work. Yeah, Jay, we'll take a look at the banks here. So Jay, not sure what indicator you're running. If you are running the big three, we got to push an update with a couple of tweaks here. So in the event it looks a little bit different, that's why. Same thing here, though, guys. I think this goes for every pocket of the market. If ban statements, if the S&Ps just squeeze the shorts into oblivion this week, financials are probably going to be pretty strong. Well, if the financials are strong, Wells Fargo, Goldman, Morgan Stanley, they're going to perform well. But if the market gets spanked right back down, very likely for the financials to get spanked right back down. As goes the S&Ps, goes XLF, as goes XLF, goes Wells Fargo, etc., etc. So that's got to be my thinking before I can pull the trigger in a bank stock, a semiconductor, a tech stock, whatever the case may be. Progress has got to start over here. Let's get back above the 50. Maybe we get a couple lower time frame buy signals, just some sort of evidence the bulls are going to try to keep the market afloat because the absence of that evidence points towards this big fat daily squeeze probably fires short. So patience, guys. It'll be a day of patience. But like I mentioned earlier, for those of you here in the free room, let me check the calendar. I'm pretty sure I'm back in here at 2 p.m. Eastern. Let me see. Yeah, beautiful. Beautiful. So, guys, I will see you then. We'll regroup, see how the dust settled, and if I do take any trades today, I'll be happy to share them with you guys. But one quick recap, all right? You've got bounces for day trades. You've got bounces for swing trades. I think we keep these as bounces for day trades. So long as HYG is below, we'll call it 75.50. And so long as the dollar, $30, is above that 21 EMA. Now, that might mean you day trade it to the upside today. You take your profits. And then tomorrow it continues to go a little bit higher. Right? Don't get concerned with that. Day trade it. Take it to lunch. Have a nice burger with it. And then go back to cash for the following day. That's kind of the thinking for now. But all right, guys, I got to jump into the gold room. So I hope to see some of you there. For the rest of you, have a great day. Trade safe. Be disciplined. And remember, for those of you on YouTube, you guys can all access the free room over here at Simpler. So head over to the website, sign up for that. I'm in there 2 or 3 times per week. You got my man Sam in there. You got Cody in there. I do think the man Henry Gamble will make an appearance in the free room every now and then as well. So worth the price of admission for just that alone. But all right, guys, we'll talk soon.